I have something to say that is going to be unpopular and a little crazy, but flies in the face of what I think every hedge fund on the street is predicting right now. And it is a long term prediction.
Welcome to Next Week on the Trading Floor. I'm your host here on Wealthion, Andrew Brill, and we're here to help you keep and grow your money. Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets. And in conjunction with Market Rebellion, we'll give you stocks to watch that will help you in the week ahead. Now I'd like to welcome in Justin Nugent of Market Rebellion. Justin, nice to have you back with us this week.
Thank you so much, Andrew. I just have a quick question for you before we start. Last time I was on here, GME was popping off, doing some crazy stuff. I'm back. What is it about us that incites chaos?
I don't know. I think Roaring Kitty just waits for us to be together. And of course, when right as we're recording this, he's going on a live stream saying he's not working with anybody and he's just putting up memes, making people think whatever they want to think to pump up GameStop. So I think it's, you know what? I'll take my half of the credit if you take yours.
Yeah, absolutely. It's all us. That's what it is.
So GameStop keeps rolling along up and down like the roller coaster it is. But Justin, so do the numbers, the analytics, the financial numbers that we keep getting. Look, there were 272,000 jobs created. They were looking for 190,000 jobs created. So it's all conflicting because then you come up with unemployment, which is up to 4%. And there's a number that we haven't seen since January of 2022. So I don't know if you can, but I'm hoping you can make some sense of this for me.
Yeah, absolutely. I think other than that 270 versus 190 number, a lot of the jobs data we've seen is showing a weakening labor market, right? Last week's initial jobless claims came in hotter than expected. This week's initial jobless claims came in hotter than expected. Obviously, unemployment is back to where it was before we even started hiking rates. And the jolts as well, hotter than expected. So I think generally speaking, we have a weaker labor market with some noise built in there. And it all really leads nicely into a live stream from the original Roaring Kitty. Before there was a Roaring Kitty pumping up GME, there was one man pumping up the stock market, and his name is Jerome Powell. And he's about to come at you on Wednesday, where I think he might do the same thing. And this is the last piece of key data, this unemployment report, that he's really going to see on Tuesday when they all meet up and start putting those dots on those plots and start pre-writing that transcript that's going to release on Wednesday. And I think that is going to lead them to probably be a bit more dovish than a lot of the market expects, even without seeing this CPI that's going to come out on the same day that they start talking and have to do this Q&A.
So you expect them to sort of stand pat, as it seems, and put out a report that says, look, we're still going to watch the numbers, but we're not making any moves yet. And that seems to be the consensus that, nothing yet, maybe in September, but we'll see what obviously Wednesday brings and then July also.
Yeah, I think Powell is such a master of not saying anything, and the Fed is a master of making these open-ended statements where that initial statement they release is like a Mad Lib, where they just swap in one word each month. But here's what the news, I think, is going to do. The news is going to overanalyze like one statement in the Q&A, like they're trying to decode the Da Vinci Code, and that's going to be, oh, hey, Powell maybe is saying that things are better off than they thought, and this data looks good, and if we keep seeing more of this data, maybe we'll cut. And even if we don't end up cutting in July, I think we're going to start seeing those rate odds that right now are pricing in a cut in September and a pause in November and a cut in December and a pause in January. Maybe we'll start to see those dove up a little bit. And whether or not they end up being right at the end of the day, I think the market gets a tailwind off of that since it's already very bullish facing.
So we have to wait and see what next week brings. But real quickly, let's look at last week and let's look at our predictions. And our winner for last week wasn't exactly that. Mark picked Vistra Corp, and I kind of feel like this is a longer term play, not just a weekly thing, because AI is a much longer term play, and what Vistra does is supply the power so that AI can work. So, look, a down week, if you took the advice and said, let me put a little money into Vistra, it's I would assume it's going to come back, but for right now, that pick was down considerably.
Yeah, absolutely. And that's why we use options. So Vista is something that we've been seeing a ton in our UOA over the past few months as it ripped and ripped and ripped higher. They've been rolling up and rolling up and rolling up to chase this while cutting down their risk, which is a common theme. This is something that we talked about, of course, the last time that I was on. And by doing that, they're taking a lot of their profit off the table while remaining that exposure. So even though Vistra's down considerably, they're likely still profitable on this. And longer term, I still think Vistra can do quite well as well. But yeah, it's reasonable to expect a pullback after such a huge rally.
And then in the penalty box last week, and this was Dell, and Dell was down about 5%, $7. So this was a good play. If the unusual options activity you hopped in on and said, you know what, I'm going to short sell Dell, you made, it went down $7. So that's not a miss, that's a win.
Definitely. This is why you go on right live when next week on the trading floor airs. You look at it, and if there's something that you're interested in putting your money on, you got to move on it because Dell opened even on Monday after that live stream had aired and then just tanked all day. And those options soared immediately within a few hours of the live stream going on. So I think that that's definitely a good sign for why we love to follow the smart money.
And then in the unusual options activity, we looked at DraftKings, and DraftKings, we bet on the puts, but it was the calls that I think were the winners there. That was up about 6% for the week.
Yep, and that was I believe, 34 strike, so not all that far from the money. But with these weeklies, sometimes you never quite know it's worth the shot, but sometimes it doesn't work out. That's how the stock market is sometimes.
So let's look at the week ahead, and I want to have a little caveat here. When we kind of started this, one of the picks was Palantir, and it picked that to go up, and another pick was Cameco. Those were two things that Mark talked about, and I believe John talked about Palantir. And I will tell you that I made 10% on Palantir. I made 10% on Cameco. Then I followed up with some NVIDIA, and I did well there too. So, and NVIDIA's like you predicted, NVIDIA announced the stock split. So if you watch next week on the trading floor, as you are now, there are wins to be had here. They may not be instant, but they are definite wins. And if you're into, like me, if you're up for a short 10% gain over a couple weeks, that's a definite win. So I've been winning with these picks. I don't know if everybody else has.
I'm so happy to hear that, Andrew, and I'm sure that there's plenty of other people out here who have as well. And on that note, I don't know if we want to just jump into the winners here, but speaking of long term, I have something to say that is going to be unpopular and a little crazy, but flies in the face of what I think every hedge fund on the street is predicting right now. And it is a long term prediction in the SPY. And spoiler alert, that's going to be my winner for this week.
And explain to us why you think this is going to be the winner. Right now, it's trading in the low 500s, and I know you thought this is going to go to about $600 in the longer term, maybe by the end of the year, which is really only 6 months away. So that's still a pretty nice gain. You're talking about almost a 15% gain on that stock.
Absolutely. I know it sounds crazy. And if we have it, I would love to throw up that chart of all of the hedge fund price targets across the entire street, because you'll see that the street high right now is 5,600. That's the highest that any of these hedge funds think that it's going to go. And there's quite a few of them making predictions. The street low is 4,100, and that's from JP Morgan's Marko Kolanovic, who very recently said, I don't see any reason to change our outlook. I respect everybody's opinion in the stock market, and there's absolutely a chance that I will be wrong on this very large call. But personally, what I'm seeing in the technicals is two very large monthly bull flags in the SPY. The first one came from the 2020 low up to that 480-ish SPY high and down to that 2022 October bear market low. We broke out of that and we're now making our way towards the measured move. And within that bull flag rally, we've created another monthly bull flag from last year's correction low up to the March high and down to the recent April low. Both of them, when you do out the measured move, have a measured move of 609. When you see confluence like that among a bull flag that is within a bull flag with the presence of the Fed getting ready to cut rates, and even if they don't, they're going to start talking about cutting rates, you start to say, okay, this is a lot of tailwind behind a bull market that is still in its mid innings. The average bull market goes a lot longer than this and a lot higher than we've gone in this current run. There's a lot of people out there who are saying, oh, it's too much, too fast. But the truth is that if you look back throughout the history of the S&P 500, many of these bull markets result in 88 to 120% gains. And of course, the dot-com bubble was considerably more. We have not accrued that mid-level of 100% in this bull market, and we're pretty far from it. So I think we have a lot of upside to go here, particularly entering the summer months, particularly as we go into this FOMC, where they're going to have to just confront the fact that most of the inflation data that we're getting is pretty good. First couple weeks of July, they're pretty good too, usually. And lastly, a lot of the big smart money trades that we're seeing, a lot of the stuff that's like that $1 billion Nvidia trade that we saw before, that are in many of the tech heavy hitters, are massive $100+ million trades expiring in September. It feels like there's something to look forward to throughout the rest of the year. So yeah, I think the SPY could go to 600 by the end of the year.
So, given the fact that there's a ton of money sitting in $6 trillion sitting in money markets because interest rates are so high, you think that once interest rates start to come down, people kind of put that money to work back into the equities?
Yeah, absolutely. And I think that even more simply, when all the hedge funds are positioning towards a max of 5,600, but they're also seeing positioning as low as 4,100, where's the max pain? It's higher. You know what I mean? So yeah, as bold as it is, I think all the hedge funds are going to be wrong. I do.
So the SPY heading to 6,000, you think? And I think I said 600. I meant 6,000. So I stand corrected. So the SPY is your pick. Now, in the penalty box is a company where I actually am friendly with the old CEO, not the present CEO. And maybe that's why it's going down, but it's Vale Resorts. And explain to me why you think Vale Resorts is in the penalty box. And they have dropped considerably this week, and you think it's going to continue.
Yeah, absolutely. I think this is a simpler idea. A lot of companies, when they miss their earnings lately, maybe miss on just one metric and still go down quite a bit. Maybe they miss their revenue, but their EPS is good and their guidance is good. Or maybe they beat on EPS and revenue, but their guidance is bad. Vale Resorts missed on a whole lot of stuff. So I think as we look at who the winners and losers are of earnings season, this is probably a sting that's going to hit for a little bit longer this week as we move forward. So yeah, I think it's a simple momentum trade that we can probably carry forward.
So Vale Resorts, we're going to stay away from or sell. And in your unusual options activity for the upcoming week, you're looking at a Robinhood, which is a trading platform.
Yeah. Oh, I love this trade idea. I really, really do. So we have a monthly chart and a daily chart as well that we can look at where they have been stuck in this range for years that they finally broke out of. And then they are cracking into this volume gap. And what a volume chart is that it takes all of the price action that has taken place, not based on time, but based on the dollar value. So what we see usually in these volume gaps is that they act sort of like a magnet, dragging the stock towards the direction that it's already moving in short order. There's just very little resistance there. Personally, this trade idea expires on the 14th. I think we could see this continue to move higher into that $33, $34 range that cracks the high of that volume gap where there has not been much trading activity and where price discovery needs to take place for us to settle again. And right now, with the stock around 23, I just think what a compelling trade idea, particularly given that the options are also exceedingly cheap for how high beta this name is.
So, Justin, can you guys look at the unusual options activity to make a lot of your stock recommendations? Can you explain your vertical spread approach that you use to make these predictions?
Yeah, you use vertical spreads usually to mitigate something called theta decay. That's a fancy word for the amount of time left in your option. And as time ticks on, if your stock isn't moving, your option is probably moving to the downside. So you need that to be moving higher, or you need some method to protect yourself from that theta decay. And vertical spreads can do that a little bit. It'll still matter, but it'll matter a lot less because we're buying an option and then we're also selling an option against it. So the one that you're selling is gaining value as theta ticks down, while the one that you are buying is theoretically losing value against theta. And of course, we use this strategy when options are typically overpriced. Something like GME, for instance. If you were going to try and play that, you look at the option prices higher than Snoop Dogg. Honestly, they're very, very high. And you don't want to overpay for these options. And so you can lower the amount of capital that you can outlay with something like a vertical spread. For Robinhood, personally, I think that these options are relatively cheap. And I think that you could opt for the straight call in this. But if you want to protect yourself a bit, a vertical spread is never a bad idea. And this is, by the way, how John Nigerian loves to trade our UOA. He uses that vertical spread to his advantage.
That's awesome, and it's he's been successful, as have you, and I know that you're behind the scenes giving him some of that information. But it's nice to see that there is a method to the madness. So, Justin, now that we understand John's vertical spread approach, that's not the only way you guys look at unusual options activity. You have something called the Rebel Pit, which is another product where you give insights into other stocks that you think are going to go up or down.
Yeah, we're really proud of our Rebel Pit service. It's created by former floor traders and pit traders to sort of give that trading floor feel to Rebels, where we're looking at 0 to 5 day expiring options. Those are really short term options, and they have the potential to go up quite a bit while they allow you to lower your risk by paying very little on these options. And as an example, this week we hit two really incredible, very short dated trades. One was in coin, which has been just ripping to the upside all week, a perfect target for very short dated options. And another one in Costco, which is also a relatively expensive stock, but by using these short dated options, we can limit our risk while gaining that 100 share leverage. And, when powered by technical analysis and insights from professional traders, we can really make something out of these short dated options.
So if you're looking to get into these stocks and make some money, it's marketrebellion.com. Look for Rebel Pit, and you can get in on that action as well. So, Justin, let's recap. You're going against the grain with your winner, and it's a little bit longer term, and that's the SPY, the S&P 500. You think that's going to about 6,000. So I know that's unpopular, and it's okay to be unpopular, but that's what you're going with.
Yeah, to clarify, the SPY is the ETF of the S&P 500. So I think the SPY is going to about 600. The S&P probably goes to pretty close to 6,000. It's usually just a bit behind the SPY.
Right. So I was right on when I said about 600 because I did look that up and I knew it was the ETF, but the 600, 6,000 got me a little confused. But the SPY, the ETF for the S&P 500, you're going with the unpopular 600 right now in the around the 520s area. So that would be a nice gain for anybody. And for the penalty box this week, we're going with Vale Resorts. Sorry to all you skiers out there, but it's that's in Justin's penalty box. And Robinhood. We're looking at the calls for that, Justin.
Absolutely. Yes.
So we're betting on Robinhood to go up. So those are your picks for the week, and we will look forward to seeing how we did next week. Thank you for watching Next Week on the Trading Floor. We hope you enjoy the insights and forward-looking information from Justin and Market Rebellion. If you need help being financially resilient, please head over to Wealthion.com. Sign up for a free, no-obligation portfolio review with one of our registered investment advisors. If you want to find out more about options trading, head on over to MarketRebellion.com. And remember to follow Justin, Market Rebellion, and us on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching. We'll see you next week on the trading floor.